All right, it was a wild day in the market. It's been just a lot of consolidation and a lot of choppiness, and it's driving a lot of traders crazy. We have Netflix dropping 40% at one point today. Now you got Tesla blowing out earnings to the upside, but really a minimal or small response to a otherwise really great quarter from Tesla. Just looking at the numbers here, I mean, they were expected to have $2.27 of earnings per share. They came in at $3.22. Then we have revenue came in at 18.8 billion, and it was expected to come in at 17.9 billion. So it was a significant beat by them. Some other important notes from their earnings. One, they're still expecting 50% of average annual growth from their vehicles. Supply chain, they're still expecting issues all the way through the end of 2022. That could be significant for future earnings if they're still seeing issues from the Shanghai plants and you have another variant, or there's just general supply chain issues still existing. Yes, that could definitely cause problems for the stock. Some other things to think about. Production's up 69% year over year. They still think they have significant or sufficient liquidity to fulfill their roadmap that they have for going forward. So one of the things, and I'll go ahead and just jump right into the chart here, right out of the gate on Tesla. We're going to look at the intraday chart. You're going to see on the 5-minute. Actually, let's just pull up the 1 minute. Ignore a lot of these like crazy wicks right here. That's just normal with after hours trading. It's still down 1.3% from where it closed the day yesterday. So it hasn't even made up all of the losses. If you go back to where it closed the day at, we finished 4.96% lower, so almost 5% on the day. So it's had a decent response, but for the kind of blowout numbers that it had, it's not what I would call a significant move in the after hours. I mean, it's definitely not like a Netflix-like response, but to the upside. We're not getting that right now. So again, let's go back to the post-market action here. And still down. It almost makes me think somehow that perhaps the street is using, because remember, I mean, they got like a PE ratio of 200. So it seems to me that maybe the street's using it as an opportunity to offload some of their shares while the retail is just maxed out, like they can't buy anymore. And that's a good chance that that's what's happening here. Nonetheless, let's look at the daily chart here. We've recovered about 1%. I expect that to go above and below positive territory as the earnings call progresses and things get shaken out a little bit. But overall, long term, let's look at this one. Heavy resistance above. This is the one area that concerns me. So you can get in, and you could actually get in with a decent reward to risk ratio. Well, risk ratio. Okay, just the risk. Risk can be fairly managed, right? So if it breaks below this recent level of support, short-term support right here, I would say it's not worth being in any longer from a trading standpoint. Now, some of you guys might be investing, like Ray here says, the prognosticator said Tesla would have missed expectations. I'm still holding. Okay. That could be more from an investing standpoint. That's fine. Okay. Remember, this is about swing trading, so I'm looking at it from a trading standpoint. When I see multiple rejections right here off of the highs going back to November 1, 2, and 3, what makes me sit here and think that, okay, we're going to test it again and we're just going to bust right through it? Maybe we do, but I need to see that first. And for me to get in at current price at like 10.16, let's say I was to pull the trigger on an after hours order right now, where am I really looking to make my money at? Getting it all the way up maybe to over the coming days, maybe I get out at like 11.30. Okay, I mean, I make 10%, but there's still about 5% downside there. So it's about 2 to 1, which isn't bad. But the thing that probably concerns me more than anything is, one, you're fighting against a very difficult market right now. We've seen a lot of choppy action. Two, this resistance is declining. That means every day that goes by, this target is declining, and it's the reward to risk ratio is getting even tighter. So those are things that you want to keep in mind when it comes to the Tesla stock. So where's support? Let's say that you have a typical reaction to earnings where people just start selling off, for no other reason. I mean, there's one of my main rules is I never hold a stock through earnings. Why is that? Well, I don't hold a stock through earnings because you can't predict earnings. You don't know which way it's going to go. So for instance, you buy stock, ABC at 100 and you think, okay, it's going to have $3 per share of EPS and it's going to have, $1 billion of sales. Well, then guess what happens? People get all excited and it just falls right through the floor. People think that because it has such a great earnings report that it's going to have just an amazing response, but it doesn't. And so I'm not saying that that's the case here with Tesla necessarily, but there is a very strong case that you could see something like that, maybe not just with Tesla, but with other stocks going forward. So with Tesla here, it's sitting on some shaky ground, needs to hold the support level, needs to avoid that sell the earnings effect, like the buy the rumor, sell the news. We need to avoid that. And then if it can get up to this 1033, 1034 level or 1134 level, it needs to actually break through it for once, okay? It continues to get sold off. And it's not just we test it and we consolidate a little bit. We test it and then we see a sharp rejection. So multiple times here. So that's the one thing that I would say about Tesla that be careful of. Now, also, one thing I would be cautious about, or just simply to look at, okay? There seems to be a little bit of a support level right here, going all the way back to about 760. Now, there's multiple ways you can draw this. So you can draw it like that, or you can just say this is your support level. At the end of the day, it pretty much comes out to the same level. So whether you want to use this support level or this support level, it really doesn't matter. But there seems to be a lot of support at the 767 level. So could we end up seeing eventually, despite really good earnings, a pullback, especially if the market sells off in the coming weeks, back to the 760 level? And if it does, that could be a really nice place to start loading up some shares. So, all right, guys, we have Anthony V, and I'll get to his here right now. He says, you're awesome. Love your videos. Could you check out Netflix and LCID? I am long, lucid, and scooped up some short calls on Netflix. All right, let me go ahead and look at both of these charts here. And we'll go back and forth between the questions and the other things here. But got some problems on the background there. Having all sorts of technical difficulties. Let me see here. All right. We'll get there somehow. There we go. All right, guys. That was going to annoy me the rest of the time because I can actually see what's behind me there. So I apologize for that. But yes, you can have some crazy stuff that happens during these live streams. All right, LCID. Looking at this chart here. First off, and I do these things live, right? So, I'm looking at these charts with you real time. So with Lucid, LCID, some major support here that is really struggling to hold. Now, I would probably draw it right about there. And sometimes if I'm not sure, I'll go back and look at some of my other drawings up of this thing. But I would say for right now, that would be one support level. You also have some other short-term support that I'll draw right about here. And then let's see here. What else do we got? You got a downtrend in place. So I would say with Lucid here, okay? And Anthony's asking, he says, he's long on LCID. The problem with LCID is that it needs to get above probably about 23, 24. It really just needs to get above this declining trend line here. That's the big issue here. But it also needs to do so without violating the support level. Now, you would think that Tesla having a good earnings report might lift this some, but it's not really seeing too much action in the post market. It's just kind of chopping along as well. And that, despite the fact that it's not like a massive move like what we saw with Tesla's earning, or it's not a massive move, and we're not seeing the massive move in Tesla either. I mean, look at, yes, Tesla is up about 4% off of where it closed the regular trading hours at, but it's still down on the day. So LCID, it's showing a similar choppiness since the Tesla report came out. So right now, declining trend line off of the December highs needs to break. This support level needs to hold. Now, Netflix is a pretty big event, right? And I'm going to be focusing on this some here in the coming days. But Netflix, if you look at this one from a long-term trend line, what you have here is the potential. You really got to go out. We're talking like 16, I think. There we go. Long-term trend line going all the way back to about 2015, actually. 2015, this is levels that hasn't been tested in 7 years. It's now testing those right now. I don't think my daily will actually go back that far. Almost 2016 it goes back. But nonetheless, this is a massive, massive trend line here that is trying to be held. So what you want to wait for, okay? You want to see whether or not on the weekly chart, because this is an extremely long-term trend line, can it actually bounce off of this rising trend line? If it can, then you have some potential for a rally higher. If it cannot hold it, then there's reason to think, okay, maybe this goes even lower. Maybe Netflix has an absolute fit. It goes all the way down to like 134. So now people are thinking, Ryan, that's like almost like a 40-50% haircut from here. Yeah, well, I mean, it's doing horrible, guys. I mean, look at the last earnings and now this earnings, and it continues to get these massive haircuts. And so it's possible, especially with the market's help, that it could see another significant leg lower if it doesn't hold this rising trend line. Now, this was a key support level, and maybe it can recapture it here before week's end. That would be significant, but this is going to be major because this represents the lows from 2019. Can it hold these, or 2018, the lows from 2018, December 2018? We had a major sell-off in quarter 4 of 2018. This stock saw a significant sell-off as well. It went from 421 all the way down to 237. Now, can it hold this into the end of the week? It's possible, and if it did, that might be also a good sign, having tested this rising trend line and recaptured the support, that maybe there is a bottom in place for Netflix, especially if the market can rebound as well. So thank you for those questions, Anthony. Those were great. Now, SPY. What kind of issues are we dealing with on SPY? So I've been highlighting this potential for a declining channel here in place. This declining channel still working here. And on the flip side, while this would be bearish if this channel continues to progress that way, you also have a inverse head and shoulders pattern. So left shoulder, head, and then right shoulder. And so what the bulls need to be focused on, can they break above this neckline of the inverse head and shoulders pattern? If it can, that's pretty significant. That would likely mean we're going straight back to all-time highs and probably beyond all-time highs. So that's something there that I think most traders are paying attention to now. I've been talking about it for a couple of weeks, maybe even 3 weeks, probably about a couple of weeks. But nonetheless, I'm starting to see a lot of chatter about it now, especially seeing it with the Qs. A lot of people are talking about, oh man, there's an inverse head and shoulders pattern on the Qs. And it's almost like textbook if this thing actually plays out, because this neckline is almost flat. I mean, it's really nice. But again, you have a declining channel or a declining trend line that you have in place here as well. And this one is something that could be more of a long-term channel that plays out. but it has to break above this. And so far, it's tried on 3 different occasions. Okay, it started it back here December 28th of last year, tried to break above it again, couldn't do it, had a complete meltdown, rallied, and then you had 2 more attempts here within a very short period, and both times saw a sharp price rejection. So we're not seeing a willingness just yet to break above this declining trend line. If it does break above it, then yes, I think that inverse head and shoulders pattern is definitely in play. All right, let's get to another question here. G Unit Beans, what do you think about shorting Facebook with upcoming earnings? Same fate as Netflix? Here's the thing. I hate the idea of shorting stocks going into earnings. Why? Yes, you can make a lot of money. And look, Facebook, it's down 7.6% alone because of Netflix's earnings. If you remember the last earnings report, it was a disaster for Facebook. Look at this. Look at this massive gap. That is a huge, huge gap lower for Facebook. It was a disaster last earnings. But should we expect it again? I don't know. I mean, I don't see like new people like creating Facebook accounts, you know, like younger people. I mean, most people don't. My daughter doesn't use hers, and I have 2 boys, and they haven't even ever talked about trying to create a Facebook account, nor do I blame them. I've thought multiple times, get rid of the Facebook account. I hate it. But actually, the only reason why I keep it is because of the HOA drama that people always post. It's sometimes fun to watch, but nonetheless, going into earnings and shorting the stock, it's a recipe for disaster. In fact, a lot of people have already thought about that. It's like, oh man, if Netflix is blowing it again, Facebook will probably blow it again as well. I'm going to buy some puts, or I'm just going to short the stock outright. Okay, that's fine, but earnings, it can have a disastrous earnings report and still trend higher if they have a good forecast, or for whatever reason, or if they just think that the selling's overdone. I mean, how many times have we seen a good earnings report and a good revenue and a good forecast going forward, yet the stock still sells off? I mean, look at Tesla today. That stock alone, we thought, okay, there's a good chance this stock is just going to rocket higher. If you knew before everybody else that this was going to be the Tesla earnings, you would say to yourself, man, that stock's going to do really good post earnings. Instead, it's not even really made up the losses from today's trading session. So you can jump in on the short side, but the thing is it's a wild guess. It's a completely wild guess. It may pay off, but it could actually be also a very disastrous guess. So one of my big rules of trading is I don't hold a stock through earnings, not because you can't be right on the trade or whatever. It's just because I can't be consistent about it, and I don't. There's nobody that can really predict how a stock will react to an earnings report, and to think that you can is almost foolish. All right, Alex Ramirez, dude is a regular, man. He asks about Costco. Not in it. Should I wait for it to break out above 612 or get in now with a stop loss of 578? Okay, let's look at this sucker. So Costco, I mean, this is part of the staple sector, right? And Staples is trading at all-time highs. As of today, it closed at new all-time highs, XLP. This sector has just been absolutely amazing over the last, look at it from a 9-year or a monthly chart, right? Going back to 2009. All Staples does is just go straight up. I mean, it'll have its day, of course, where it does have a pullback of some significance, but good grief. This thing never goes down, it doesn't seem like. Since 2009, XLP has gone from 19 up to 80. That's almost like growth. And yet, what's the big plays in XLP? It's like Walmart, Costco, Procter Gamble, I mean, Clorox. But yet this thing just continues to chug higher. I mean, last 2 months alone, it's gone from a lows of 71 all the way up to 80. That's a 10% move. Okay, so talked about the sector that Costco is in. What about the discount stores? Check out this one. Look at that. Trading at all-time highs. So you have a sector and an industry, the staples and discount stores, both trading at all-time highs. So Costco is in good company right now. kind of like a bull flag pattern that's developed. It's broken out of it. So I think right now, I mean, it sets up well. And the thing about staples too is it's a place where a lot of people go when the market becomes uncertain. It's like a safety place. It's a place where a lot of people want to park their money because they're thinking, okay, the market goes to crap, the economy goes to crap. People still want to buy toilet paper at Walmart, and they're still going to go grocery shopping. They're still going to go to Costco's to get lunch meat or, Kirkland. By the way, speaking of Costco, this bourbon is really good, guys. This is what I'm drinking for today's live stream. I forgot to tell you guys, but yeah, it's the Bottled and Bond, which I can't find anymore. I'm hoping they have some come Christmas time because I'm going to load up on it if they do. But really good stuff. So yes, people are still going to buy Kirkland's bourbon. Not bad stuff at all. So you got a support level. It's bounced off of this support level. 578. I think that's a pretty decent stop loss to use. Yeah, I'd probably use that. Probably even give yourself a little bit more wiggle room there. You could probably go like 577.50 or something if you wanted to. But overall, no, I like this chart. I think it's pretty good. And it's been on my watch list for a while. Thank you, Alex. All right. We have got some analysis requested for shop. Oh, I didn't even look at this one today, but man, look at that sucker, guys. So again, let's go. I'm going to clear some of these lines out of the way. Let's go with. So a long-term trend line, this is kind of like similar to the Netflix situation, right? Can it come back down and test this long-term trend line? Well, it was trading at 1750. Now it's trading in the 500. Yes, I do think that it can come back down to 272. That's a very strong possibility. So declining trend line, it's still intact. Nothing really to get excited with right there. Declining trend line, yet to break it. That's on the weekly chart. Now on the daily, you still see the same declining trend line. Just an absolute mess for the stock. If it can't break above it, there's no reason for me to want to be in it. Now, today it sells off 13.3%. Next question is, can it hold that support level? Because if it doesn't, then you got a new lower low in the stock. So that's another problem. So this is, for me, this is where, I don't want to be a holder of the stock anymore if it breaks below this level, going back to the March lows. For me to get bullish on a stock, I need it for it to get back above the declining trend line. So right now it's in the middle. We don't know if it's going to reverse off of this support level and break through this declining trend line, or if it's just going to break through and start that next leg lower. But it's worth waiting and seeing first. We got a lot of latecomers here today. Thoughts on BBBY? I am currently short on it and I'm up 6%, but not sure when a good time to exit would be. Thanks. Also, what's your drink of choice for today? Like I said, it was the Costco's Bottled and Bond bourbon whiskey. Good stuff. I love Bottled and Bond. I love that 50% alcohol, 100 proof. Just for some reason, it's just a nice balance. But BBBY, Bed Bath and Beyond. So this is like a Wall Street Bets favorite, right? That and Build-A-Bear, GameStop, AMC, all that stuff. This thing is really taking a beating. So you must have probably just recently got short in it, maybe the last week or so. Overall, yes, it's a mess of a stock. I think eventually I could see this support level right here playing out. Like, let's go down all the way to 1276. I mean, have you ever been to a Bed Bath & Beyond recently? I had to go there because I had no seafood stuff to open up my crab legs with. So we ran down there. There's like nobody in this place. And I would expect at some point that the two support levels to watch, and this one looks like it's actually broken. So it's really not worth watching at this point. The one support level would be this, these recent lows here at 1282. You could see a bounce there because, I mean, as much as I think like some of these run-ups in these stocks, like let's go back to January 2021. This was just a stupid run-up, right? It goes from like 18 all the way up to the 50s. Now it's back down to 16. But look, it's down like what, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 straight days. Maybe it goes down to 13th, maybe if it goes down to 14th, but you're starting to get to that point to where you could see a bounce in the stock, and you don't want like a 6% loss to turn into or a 6% winner turn into a loss. So, from me trading it at this point in time, maybe I start taking like half off the table or 3/4 off the table and just leave that last a lot in there to see how far it wants to run. Barry is asking, what stocks do you think will likely go down in the short term that haven't dropped yet? I think some of your FANG stocks, honestly. I mean, the FANG stocks is basically holding up. Like we just talked about Shop, right? I mean, pretty big company. Almost everybody knows about it. We've talked about Square before. We've talked about PayPal. These stocks have been getting hammered, right? If the whole NASDAQ was doing this, I mean, it would be a completely different picture. But what you have is you have most of the FANG stocks. It used to be all of the FANG stocks. I mean, it wasn't too long ago, Facebook was trading, back in September, trading at, all-time highs. And even until last earnings report, it wasn't that far off. But you still have the holdouts. You still have Apple. Has yet to really see any significant selling. You have Tesla. Yet to see any major selling. Well, yeah, I mean, how's it holding up in after hours here, huh? Still pretty much ho-hum. It's kind of like settled into a range there for now. So you have these tech stocks that really haven't, broken down yet. Even like Amazon, it's still trading in this sideways range that goes back for almost the beginning of time. So we talked about Apple, we talked about Amazon, Google, same thing. You got these topping patterns that just have not broken down yet. But since like the March 2020 lows, it's gone from like 1,000 up to 2,500. And at one point it was up to 3,000. Okay. And then you can say the same thing about Microsoft. Big companies, but they've been holding up the market. Now, will the day come where these things start to falter? And if they do, your NASDAQ's toast. So if you are long on the market, be praying that these big behemoth companies don't start selling off. Yes, they're great companies. They've weathered a lot of storms, but right now the market's on the wrong side of the Fed. So those would be the ones that I think ultimately have to start to buckle. A lot of your semis, like NVIDIA, it was trading at 340. Now it's trading at 215. They've seen significant sells. Apple has not seen that. AMD, same thing, gone from 165 down to 94. So those are the ones that I would look for. Also, most of the time in a bearish correction, your utility plays or your safe sectors like utilities, some of your staples that we just went over, they don't usually start to falter until towards the end, where everybody's just, you know what, I got to raise cash somewhere, get a margin call, I'm going to dump my shares of Walmart. So that is what I would probably say. What is the name of the bourbon waiting for Costco to get? Knob Creek 9-year single barrel again. Oh, they got that. I would love to get myself some of that as well. But yeah, it's bottled and bond. Let's see if I can. Bottled and bond. Yep, there you go. Take a screen grab of that or something. Good stuff, man. I really like it, but I've been sipping it slowly because I just don't want to use it all up. All right. Barry also asks, is the Russell all right or typically riskier because of the Fed hikes? Now, typically the NASDAQ is the one that tends to have the most problems when the rates go up, because they're leveraged with debt. Now, the small caps, you would think so too. But if you look at a lot of your market sell-offs, the Russell's held up much better than the NASDAQ. So that doesn't mean that won't happen here. I actually think among all the indices right now, the Russell is by far the weakest of the indices. It just doesn't look good. So you look at the Russell, look at this. You got a bear flag and you have some heavy resistance overhead that it's not able to break through. So coupled with this nasty topping pattern plus a bear flag, yes, I think it's probably going lower. However, we just haven't yet seen that breakdown of the bear flag. That bear flag breaks down, I expect it to get pretty ugly. But ultimately, I think in this economy where tech has been such the basically the gold standard for the market, it's what everybody's rushed into. FANG stocks, everything. Nobody can get enough of tech. It's very similar to the .com of 2000. I think that's the one that's going to get hit the hardest. So, all right. So wrapping this up. Good session with you guys. Sorry about some of the distractions back there. When you do these things live, and I'm a one-man show, so I don't have like, somebody behind the camera that's like, oh, I'll go fix that for you. I'm like grabbing remotes, trying to flick it off and everything else. Not flick it off, but turn it off. The market is bonkers. I mean, last 7 days, it's been 4 days down, 3 days up, and it's just the same, up, down, up, down, up, down, and it's very difficult trading. It reminds me some of like 2015, where there was a lot of sideways price action as well. That's the way it's been for about the last 3 months. And if you're squeaking out a profit in this market, you're doing probably better than 95% of the hedge funds. It's not easy sailing right now, but you just don't throw your hands up in the air and give up, because that's where a lot of people, if they would have just stuck it out a little bit longer, they would have actually got the trend and they would have a good solid direction to trade with. Right now, we don't have that direction very well. We kind of know what's on the horizon. We know that the market's on the wrong side of the Fed, that, everybody talks about don't fight the Fed when the market's going up, but everybody starts to throw that idea out the window. It works both ways. Don't fight the Fed when they're starting to taper and when they're raising interest rates, because it can get, really nasty for your portfolio. So make sure to like and subscribe to this channel. It really helps me out. I'm going to be doing videos, throughout the week, and I do these live streams once a week. So you guys like and subscribe. It means the world to me. It really helps me out a lot too. And, I get to know a lot of you guys too. I mean, you take Alex here, he's like a regular. So always appreciate you guys coming back and watching these videos. Thank you guys, and God bless.